What's going on in the housing market and what can we expect for mortgage rates as we head into the tail end of 2025? Hey guys, it's Evan Swanson here with Guild Mortgage, wishing you a very happy summer and here to give you just a brief update on what we've seen in the housing and mortgage markets year to date and what we can expect moving forward. So let's go ahead and dive in here. First off, home prices are continuing to rise, although the pace of appreciation is declining. So this is the Case-Shiller Home Price Index for Portland. You can see out here, since mortgage rates have risen in 2022, home prices are continuing to increase, but at a more modest pace. You can see that according to the Case-Shiller, home prices in Portland are up about 1% year over year. That is trailing the national averages, which is showing about 3% appreciation year over year. The number of homes available for sale in the Portland market is at the highest point we've seen since 2019. So inventory has been building throughout the calendar year, and we would expect to see that into the third quarter of this year. So more homes on the market means more inventory, and this is measured also when you look at market absorption. What do I mean by that? This is the RMLS number, which takes into account if no more homes were listed for sale at the current pace of purchasing, how long until the existing market would be bought up? And you can see right now it's about 3.6 months, which is the highest level we've seen at any point in the last couple of years. So again, this shows more market balance. And as a result, we're seeing more sellers have to decrease their prices in order to attract buyers. So this doesn't mean home prices are falling. What it means is more and more sellers are listing their homes at higher prices, which is not attracting buyer. And so they're having to bring that down to account to make the home more affordable for a buyer. Now, what this doesn't take into account as well is homes that maybe sold at list price, but the seller had to offer market incentives, closing cost incentives, to buy down the buyer's interest rate to make that more affordable. Now, speaking of mortgage rates, if there's some good news here, it's that we are seeing the overall level of interest rates improve gradually. So where we started off the year, rates were up around 7%. Right now, we're in the high 6% range. And there's still a lot of people who think that the current level of interest rates is high. And I would argue that's not necessarily the case, but I do see how our minds work here in terms of recency bias. So we went through a period of time from 2010 to 2022 where mortgage rates were about 2.5% to 5%, and that created a new kind of paradigm. It was September 2022 when mortgage rates went up above 6%, and that felt high to everybody. But if you look at it over a longer scale, what you'll see here is that the true outlier was the interest rate environment from 2010 to 2022, and that a normal fixed mortgage rate is probably around 6.5%. At least for now, I would expect mortgage rates to remain in the 6 to 8% range. And what would it take for mortgage rates to improve? Well, not so much a Fed rate cut, because the probability of a Fed rate cut is already baked into the mortgage rates available today. But the Fed could adjust their quantitative easing by reducing the number of mortgage-backed securities they let run off their balance sheet. And if they did that, we could see rates improve. The second thing is a normalization between the spreads in the U.S. 10-year Treasury note and mortgage rates. Historically, that's around 2 percentage points. Right now, it's about 2.5 points. So if we saw that spread come down, we'd expect mortgage rates to improve. And then there are many economists, given all the market uncertainty out there, who are predicting a recession. Normally during a recession, we do see mortgage rates improve a little bit. So what are the current market themes? Well, affordability continues to be a challenge for many first-time homebuyers. With interest rates between 6.5% and 7.25%, and home prices basically stable, it's still a reach for many first-time homebuyers out there. So one of the things we talked about is if sellers are willing to decrease their prices, they may also be willing to provide closing cost credits, and we can have a larger impact on a buyer's monthly payments with closing cost credits than we can price reductions. Number two, the mortgage rate lockdown. There's still many homeowners out there, 75% approximately, that carry a current fixed rate below 5%. And if you have a fixed rate below 5% or below 4% even, you have a big disincentive to make a housing transition. That will continue to be a theme moving forward, which will reduce the volume of sales. Inventory, again, inventory is up. So if you are a first-time home buyer or you know of a first-time home buyer, you can be very opportunistic in looking for a home. There is a lot of first-time home buyers out there that would like to buy, but feel fairly uncertain about the economic environment, which I empathize with. But in 3 out of 4 scenarios, we feel that a buyer is better off buying today, assuming that they're financially ready for that, than they are waiting. So we would encourage it. Lastly, a couple other opportunities. We are seeing an uptick in demand for second mortgages. This is where existing homeowners who have all the equity they've earned in previous years, they want to make home renovations, or maybe they have some consumer debt they want to clean up. A second mortgage allows them to borrow against their home's equity without refinancing their first mortgage. Secondly, we're seeing a big uptick in demand for reverse mortgages. So this would apply to those aging in place who want to remain in their homes, but want to improve their overall financial stability. And a reverse mortgage can help some aging homeowners get rid of their mortgage payment. So if either of these apply to you, feel free to reach out. And if anything applies to any of you, understand I am standing by here to help you. Please feel free to drop a line if I can assist you. Thank you so much for watching.